Your profit figure can lie to you, not because your accountant is doing anything wrong, because profit was never designed to tell you the one thing you actually need to know: whether you can pay your bills this week. I've seen it more times than I can count. A business owner looks at the year-end numbers, sees a healthy profit, and feels great. Then 2 weeks later, they're lying awake, wondering how they're going to make payroll. Both things are true at the same time: profitable on paper and out of cash in real life. So today I'm going to show you exactly why that happens, the difference between profit and cash, the three places they quietly split apart, and the one thing you can do this week to see it for yourself. Get this straight, and you'll never be blindsided by your own numbers again. Let's start with the reframe. Profit is an opinion, cash is a fact. That sounds like a clever line, but I mean it literally. Your profit depends on choices. When do you count a sale? The day you invoice it, or the day you get paid? How do you spread the cost of a vehicle across the years you'll use it? Change those choices and your profit changes, even though nothing real happened in the business. Cash doesn't work like that. Cash is just what's in the account. You can't argue with it, you can't adjust it. It's either there or it isn't. So when your profit says one thing and your bank balance says another, believe the bank. Now here's where it gets practical. There are three places where profit and cash split apart. Once you can see them, the mystery disappears. The first is the timing of sales. Profit counts a sale the moment you make it. Cash only counts it when the money actually lands. If you invoice a customer in March, but they pay you in May, your profit says March, your bank account says May. That's the gap I covered in the last video, and on its own, it's enough to leave a profitable business short. The second is big purchases. Say you buy a machine for 10,000. On your profit statement, that 10,000 doesn't hit all at once. It gets spread out over the years you'll use it, a little each year. That's called depreciation. So your profit this year only shows a small slice of the cost. But the cash, all 10,000, left your account the day you bought it. Your profit looks barely dented, while your bank balance took the full hit. That's a classic trap. Owners buy equipment, still see a healthy profit, and can't understand where the money went. The third is the sneakiest, because it's money that never shows up on your profit statement at all. Loan repayments, your tax bill, the money you pay yourself, stock sitting on the shelf that you've paid for but haven't sold yet. Every one of those drains real cash out of your account, and not one of them appears as a cost on your profit line. So you can run a genuinely profitable month and still watch the balance shrink, because the money is leaking out of the bottom, where profit never looks. Put those three together and you get the whole illusion: a business making money on paper, quietly running dry in reality. So here's the mistake I see most often, and I've made it myself. You have a good month, the profit looks strong, and you spend it. You reinvest, you take a bit out, you commit to something new. But the cash for that profit hasn't fully arrived yet, and underneath it, the tax and the loan payments are still waiting their turn. You just spent a number that was never really yours to spend. Profit is not spendable. Cash is. If that's the only sentence you take from this video, it will save you. So here's your one action this week. It takes 10 minutes. Pull your profit figure for last month, and next to it, pull your actual bank movement for the same month, what really came in and what really went out. They will not match. Now find the three biggest reasons why. Maybe it's a customer who hasn't paid. Maybe it's a loan repayment. Maybe it's stock you bought. Whatever they are, those three reasons are the exact difference between how your business looks and how it actually feels. Do this once and you'll never fully trust the profit line again in the healthiest possible way. That's the straight answer. Profit tells you whether the business works on paper. Cash tells you whether it survives. You need both, but when they disagree, you follow the cash. Every time. Next time, I'll show you how to chase an overdue invoice and actually get paid without turning a good customer into an ex-customer. If this made the penny drop, subscribe and drop your business question in the comments. It might be the next video.